you are a new potential home buyer, so I'm going to talk to you about a purchase cost estimate, also called a loan estimate, or an LE as we call it internally. As a consumer, you want to make sure that you always get a loan estimate on all of your loans, and in that loan estimate it's comprised of several sections, and when you're buying a house there are 3 areas of cost to you that are related to financing. So number 1 is your down payment. So that is typically either a flat amount or a percentage. The second cost to you as the consumer is an escrow account, which we'll talk about at a later time for taxes and insurance. And the last is closing cost. So you want to get a cost estimate to compare closing costs. So the number 1 thing I want to get through to everyone today is whenever you get a cost estimate, it's critically important that you ask the lender for their APR. If you ask a lender for an APR, that lender will know that you are serious, that you are knowledgeable, and that you know what you're shopping for. So let me give you an example. If you're shopping for a house and today the rate is 5.75, your APR is always higher because your APR takes into account closing costs that you're paying. There are certain closing costs that impact your APR. So in theory, if you got a mortgage and there were no closing costs, your interest rate would be 5.75 and your APR would be 5.75. But on a mortgage, there are in fact closing costs. So on a conventional loan, your APR, if you're not paying points, should be about 1/8% higher than your interest rate. So if you look at 5.75, APR should generally be 5.875, 5.89, somewhere around there. That is a very quick, easy way to tell that you're not overpaying or being overcharged in closing costs. So remember, down payment, escrow account, closing costs. Closing costs are divided into 3 sections. Your lender has part of your closing costs. Your title company or title attorney that you choose is the second part. And the last is the government for any government taxes or local authorities that have local fees to record your mortgage and things of that nature. So under the lender fees, you will see things like your appraisal fee, credit report, flood cert, tax service fee, processing fee, underwriting fee. You may see origination fee. You really want to look out for certain costs to make sure that you're not overpaying. The biggest thing is discount points, origination fees, and I've even seen some banks quoting what are called loan level price adjusters. If you see that on your cost estimate, question your loan officer that provided you with that cost estimate. Make them explain what that is and what you're doing. Points is a very big area of contention, whether you should pay them right now, whether you should not. I've had clients who have honestly sent me cost sheets. The most shocking one I ever saw, I had a client who was buying a $500,000 house. They had $75,000 to spend for down payment and closing costs. So as a loan officer, I quickly mathematically recognized that the best thing to do is $500,000 house, put 10% down, put $50,000 down, and use the other $25,000 for closing costs. And I did the numbers for them. I sent them to them, and they were like, Jerry, your interest rate is not as good as ABC Mortgage. And I said, that is not possible. I've never lost a loan to them. You have to be paying points. No, I told them specifically not to charge me points. I am not paying points. I said, okay, well, let's compare my cost estimate to theirs. Can you send me their cost estimate? And what this very well-known large mortgage company did was they had them put 5% down. They were in fact charging them $34,000 in points. So their rate obviously would be better than mine because they were buying their rate down so much with that money. With $34,000, it was shocking to see. I never would have thought any loan officer worth their weight in gold would ever do something like that. I think if the customer probably, if they had something in writing that said, I do not want to pay points, and they sent that to them and then they got an offer with nothing but points, then that's a gray area and a slippery slope for sure. That's what's just really important to deal with someone who has integrity and someone who's ethical when you're getting a cost estimate. So cost estimates will show you your closing costs, your escrows. It'll show you your total monthly payment, your principal and interest, your proposed real estate taxes, your insurance, mortgage insurance if applicable, HOA dues if applicable, and then in the bottom right corner will typically show purchase price minus any credits that you have in hand money, paying for the appraisal up front, any seller's assist or seller credits that you got, and then subtract your loan amount, and what's left is the amount of money you need to come to closing with. Now let me tell you what you will not see on a cost estimate, because this is very important. You will not see the cost of a home inspection on a cost estimate. You will not see the cost of a radon, a termite, a sewage, a survey, any other things that are optional, and things that you should certainly do. If your agent is telling you, hey, my best advice for you is to get a home inspection, you should certainly get a home inspection. We don't show that on our cost estimates because they're optional and they're things that you deal with outside of financing. We, as your bank, never get involved in your home inspection and any other inspections for that matter on the cost estimate. So that would not show on there. Other than that, everything else should show. Another little trick on your cost estimate. So as I said, APR is paramount. Make sure you get the APR. The second thing is discount points, origination fees, loan level price adjusters. And the third little trick is look to see how much money your lender has you putting into your escrow account. When we do a separate video on escrows, I'll show you in more detail, but every area of the country that you do a mortgage, a certain amount of months should go into your escrow account, and shorting that account on an initial cost estimate is a very quick and easy way to make your numbers look better than somebody else's. I always overestimate just to make sure that you're covered. And the last thing I'll leave you with on a cost estimate, make sure that the amount of money that they're showing for your homeowner's insurance is a realistic number. Make sure that it's not showing $50 a month for a $600,000 house. That is just absolutely not realistic. So start with a cost estimate. It'll show you all closing costs, the down payment and the escrows, and the total amount of money that you need at closing. And as I said, shop for APR as well as interest rate. So when I say shop for APR, here's what I'm talking about. Say that you come to me and I offer you 5.75 and my APR is 5.89. Let's say that you go to XYZ mortgage broker. They offer you 5.75 and their APR is 6.12. Immediately what that should say to you as a consumer, you're paying more in closing costs with XYZ broker than you are with me. That's why you ask for APR. APR reveals hidden closing costs. Now, not all closing costs are a part of your APR, but things like points are. So that's where it's revealed on a cost sheet or a cost estimate or a loan estimate. Hope that's helpful, and we will see you soon.